Rebonjour à vous, mesdames et messieurs. Welcome back, ladies and gentlemen. Merci à vous également qui nous suivez sur les plateformes réseaux sociaux. Je sais que vous êtes nombreux à nous suivre sur YouTube. Bonjour, we see you, we appreciate your presence as well. Nous espérons, mesdames et messieurs, que vous avez profité de cette pause rafraîchissante et que vous en avez profité pour vous connecter. Nous sommes ravis de poursuivre cette deuxième partie de la deuxième journée du rendez-vous de Casablanca de l'assurance. Je rappelle que nous sommes réunis pour la 10e édition de ce rendez-vous devenu incontournable. C'est une occasion à célébrer, et à cette occasion, nous avons eu le grand honneur d'avoir des speakers de haut niveau, et nous poursuivons avec beaucoup de plaisir avec une autre intervenante de renom. Nous avons l'honneur d'accueillir parmi nous la présidente de l'Autorité européenne des assurances et des pensions professionnelles. Dans son intervention, elle abordera les défis actuelle de la supervision des assurances face aux risques émergents. Ladies and gentlemen, please join me in welcoming to the stage Petra HIELKEMA, Chairperson, European Insurance and Occupational Pensions Authority. Let's please give her a round of applause. Welcome to you.
Hi, everyone. Good afternoon, everyone, and let me start by saying it's such a pleasure to be here in Casablanca. What a wonderful arrival, so many familiar but also new faces that I'm happy to meet. And so a big thank you to the organization, and also a big thank you to my colleagues in the Supervisory Authority in Morocco for having me here. The title of my speech, What Insurance in a World of Uncertainties, thought-provoking. A lot has been said already, but let me also share from my perspective as a European Insurance and Pensions Authority what we do on that. And for those who are not fully familiar with EIOPA and what we do, we are the European Insurance and Pensions Authority. And we can do three things. We can give advice to the European Commission, Council and Parliament on our own initiative or when asked. We can also provide technical data. We are a data hub. We have a lot of data because of the reporting that is done by all the European insurers, also to us, but also pension funds. We make sure that the supervisors in Europe, in the individual member states, do implement laws, follow law, and if they have a dispute, they can come to us. We're also the face of European supervision on insurance and pensions to non-EU countries. And when I say we, it's not just me as the chairperson of EIOPA. Of course, I have a say in my board, but my board consists of the 27 supervisors in the EU, and that means a lot of different markets. And the previous speaker alluded to that. 27 countries in one continent means that there are differences, but there are also the same problems. And some of the problems I heard that you spoke of today are also our problems. If you look at the pension gap, the risk for people to live in poverty in the EU, that is currently 20%. So 20% of Europeans are at risk of living in poverty at old age because they haven't saved too much. If we look at penetration of insurance, there are still many EU countries that more or less only have mandatory motor insurance, but very little additional insurance. And because of that, we have a huge gap when it comes to the protection of risks resulting from climate change, because currently only 25% of the losses that we expect because of climate change are insured. And that means that 75% is not. And I think here it is good to also work at the international level, because maybe together we can find ways to have people buy more insurance, have governments and insurers work together to solve the fact that too much damage that is coming is currently not covered. But let me look at what we need to do in a world that is transitioning. And there's a lot happening. There's this transitioning into an era of generative AI. And this is going very fast. And that means a lot of potential from enhancing efficiency, personalizing experience, being actually able through mobile phones to reach your consumers and to enable transformative processes. But I'm a supervisor, I look for the risks. There is also a risk that comes with that, because there can be bias, there can be unfair treatment, and there can be vulnerability to cyber attacks. Now, the historical role of insurance sectors has been to provide people and businesses and communities with measures to protect against that and sleep well at night by pooling resources to spreading these risks. However, in today's world, the very nature of the risk is changing, and I think that is a challenge we need to face together. Insurance operates on probability. But what happens if actually we cannot measure the risk and therefore assess the probability? I'm talking about cyber. And also what happens if you can actually measure it really well? If you can measure it with such a precision that it's more a certainty than a probability. And here some of the climate change risk, of course, comes into play. And what if things are just simply too costly to insure? Now, in order, and this is really a call to the industry, to fulfill your role, we need to be optimistic, see the possibilities, and find a way to really play the role as society's risk manager. They can help. Insurers can really help. They know how to assess the risks, they know what to do about the risks, they can provide products that protect against the risks. Now, what are these risks? And let me dive into them a bit more specific. We heard many people also yesterday speaking about natural catastrophe risks. So here I'll keep it short. But the efforts to reduce greenhouse gas emissions to meet the EU target for 2030 have not been entirely effective. And we see that the consequences are enormous. Direct losses stemming from natural catastrophe globally amount to $280 billion only last year. And in Europe, it was around 80 billion in only 1 year. And the rate of the increase of losses for nat cat in Europe is currently 2.5%. So we see an increase of losses to the economy of 2.5% on a yearly basis. Narrowing the protection gap is therefore one of the priorities of EIOPA in our work. And we're doing different things to deal with that. First of all, and I said that, we have a lot of data. We do data modeling and we provide that data back. So if you go to our website where we have the European Centre of Excellence for Natural Catastrophe Risks, you can find, first of all, open source NatCat data that we share. But you can also find the first European dashboards that shows what perils are there, what is the exposure of 30 individual countries to earthquake, to drought, to forest fires, and to flood, and how much of that is insured. And we update that on a yearly basis so that both governments but also insurers can see what still needs to be done. And through the perspective of sharing the data, we support European supervisors and policymakers in taking steps. And we also support the insurers themselves. We provide a user-friendly application that makes it possible for insurers to actually model climate risk on the basis of a Climata model that was developed by the University of Zurich, but wasn't very consumer-friendly. And by providing this app that makes it user-friendly, also the smaller insurers now can actually model climate change risks without having to buy or develop difficult tooling. Now, second, and we really strongly feel about this, we need more climate adaptation and climate mitigation. It's core, because this increase of 2.5% on a yearly basis is really not sustainable. And this is also why EIOPA, together with our colleagues in the European Central Bank, developed a paper that we published last year on policy solutions on how to close the protection gap. What we see is, first of all, a strong role for insurers to, first of all, share their knowledge about the gap, so raise awareness that there is a gap. Secondly, raise awareness that you need to then insure. And here what we found for European consumers is that there are several reasons why they would not take on insurance. And for sure it's also GDP, but at the same time many feel that it is too expensive. But what they think is the price is often too high. So thinking about a cheap, simple product that offers some protection and that is clearly explained by supervisors can really help the uptake of insurance also in certain parts of Europe. The second part is that we need to further develop the ability of reinsurance. And I was very interested in listening to the speaker on reinsurance in Africa. But reinsurance, of course, plays a key role when it comes to the sustainability of business models and the insurability of businesses and individuals. But finally, we also need the government to step in. And these are public-private partnerships. And currently, we work on that. We are analyzing 12 schemes that are in the world, among those Italy, France, and Spain, particularly France and Spain for drought. They put in place some schemes where there is a cooperation between the market, the businesses, and the government in taking care of the risk for drought. And the starting point is actually a signal from the government where the government will not step in. One of the findings when we did a behavioral study on why people don't buy insurance is because they really trust that the government will help if it's necessary. But in reality, that help doesn't always come. In long term, the debt won't be sustainable, and moreover, it often takes longer. So saying that you're not helping as a government for the first, for example, 15%, and that you expect people to get their insurance for the first 15% of the losses, is a way to send a clear signal that individuals also have to do something. And a second step would then be that the individuals take an insurance, which is a simple product that also delivers when it's necessary, so clear conditions. And finally, that when they buy the product, they are also incentivized to take measures. When it comes to flooding, don't have all your electricity that comes into the house, don't have that on the ground floor, but move it up so you don't have that damaged when there is a flooding. And finally, of course, there is public-private partnership in the form of a dialogue between businesses, city councils. Where should you build? What crops should you actually consider to have as agriculture? What is sustainable in the long term? And here it's important to realize that insurers need to price for their risks. That's very important for the sustainability of an insurance business. If the price then is high, that is not because insurers don't want to be nice, but it's because the risk is high. And if that's too high, then maybe we need to see what we can do about the risk. And I think it is this dialogue that we need to have as a society between consumers, governments, city councils, and insurance to find solutions. We all have a role to play. But let's move on to another risk that was also mentioned already a bit today, because we have more initiative when it comes to gaps. And the topic I want to touch on now is cyber risk. Cyber risk very much is a protection gap, and it's not so well researched yet. I do not have the data on cyber gaps that I have on climate and nature yet. However, cyber attacks in Europe and elsewhere have steadily gone up. They're on the rise, and so is the demand for cyber insurance. At the same time, for sure, the supply of cyber insurance is up, but it's not at the pace that the demand is. So many businesses and organizations are exposed to losses due to business interruption, incident response expenses, and data breaches. And with that, there is, in an increasingly digitalized global economy, and AI only starting, we have a challenge that we need to look into. The cyber insurance market, as I said, is growing, and actually it tripled in size over the last 5 years, and we expect it to double in the next 2 years in Europe. And still, we don't think that that will be enough. Because despite the fact that businesses have difficulty to assess what is the real impact, 87% of managers do believe that they are inadequately protected against cyber threats. So that is an EU market where 87% of the leaders of companies say they would like to have more protection. I will call that a growth opportunity. One of EIOPA's goals is to protect consumers and businesses in the process of digital transformation. And so what we have done is we focused last year on the medium and small size companies. Normally we look for consumers, but when it comes to cyber, we feel that also the smaller companies, the mom and dad shops, actually need as much help that individual insurers do. And so in order to help understand what the gap is, what the needs are, we did a survey among many, and we are working on the results, and then we'll discuss with the industry what we can do. But the logic you hear is that it starts from reaching out, talking to the market, getting the data, understanding the gaps. What we also did was we launched a digital market monitoring survey, and we collected how much cyber coverage is actually available. And we find that it currently is not enough. So again, call to insurers. There's a large role to play here. Promote awareness of the exposures, share the expertise of risk management, and encourage people to take measures and get insurance. Now, of course, also insurers themselves are not immune to cyber attacks. And cyber resilience of the insurance market itself, the financial sector itself, is essential. And that is why I'm very happy that the European Commission and Parliament and Council agreed on the EU Digital Operational Resilience Act, DORA, that we are currently implementing. And the logic of the DORA Act is threesome. The first, what is helpful with DORA is the reporting. I think all financial institutions need to report a lot on cyber because of different laws. What DORA will do is it will unify that. It's what we call a lex specialis, and it means it overrules all the other reporting requirements, meaning that there will be one way of reporting for industry, thereby reducing a burden. Second is that there will be a standard for testing, for operational resilience testing, which would be also helpful if you are operating in several countries, because once you have done the test, you can say that to all the supervisors, and that should also, first of all, help to raise resilience, but at the same time reduce burden. And finally, and I think this is in essence why this act is so important, as an insurance supervisor, when we look at resilience for cyber risks, we go to the insurer and we look to which the insurer is, to whom are you outsourcing? And then we follow the chain of the outsourcing, sometimes multiple steps. But we often end up with the same cloud providers. And you all know them, and there's a large IT companies worldwide that do cloud. So think Microsoft, Amazon Web Services, Google, they all are out there, Bloomberg. What DORA does is, it doesn't only say that insurers need to be resilient, no, it gives actually EIOPA itself powers to oversee these critical third parties. So as of the 1st of January 2025, EIOPA, together with the Banking and Markets Authority, will be the overseer of the critical third parties that we will identify. But you probably can imagine that it's highly likely that the companies that I just mentioned will be part of that oversight. And with that, we try to enhance the overall resilience of our sector. Ladies and gentlemen, I've addressed two roles of insurers promoting resilience: narrowing existing protection gaps and also managing the emerging ones. Now I would like to turn to one more example, and that is risks stemming from the wide use of artificial intelligence. We are entering into an age of generative AI, which will reshape society. And from the perspective of insurers, this technology offers unprecedented opportunities. Opportunities to streamline operations, innovate your product offerings, and deliver customer value. And that is also why, I think for good reasons, in January, the World Economic Forum published a list of the 5 businesses that will benefit most from AI. And on number 1 was underwriting insurance. However, I'm a supervisor, I look for the risks. These promises come with new risks, including ethical concerns broadly, and in particular also data privacy issues that can lead to discrimination and unfair offering of products. What we are seeing in the EU is that the use of AI in the insurance industry is going up in the value chain. So it starts very much in the back office for efficiency, but it's slowly moving in the way claims are handled and also products are sold. And new actors are entering in the market, both as competitors, but also as cooperative partners that help existing undertakings. Now, for sure, digitalization has not reached the point of truly disrupting. I'm not worried currently about disruption. But nonetheless, it is changing the way consumers approach insurance. And what we see is that younger generations want simple products. They want to have it digital, they want it to be convenient, and they want it available 24/7. That is a change of thinking on how to reach the younger generations. We're also seeing supervisors around the world focused on updating their legislative frameworks and upgrading their skills and knowledge, and so are we. Together again with our banking and markets authority, we founded the Digital Academy for supervisors, and on a monthly basis we are training European supervisors in how to supervise AI. And the EU didn't stop there. We recently also adopted an AI Act, a piece of legislation that is one of the most comprehensive regulatory responses to widespread use of AI that I currently know. It very much is like the GDPR, that is there for data protection, and it's set on the idea that it's focusing on the technology no matter in what sector it is used. And therefore, it also includes the financial sector and therefore insurance. It follows a risk-based approach, identifying certain practices of AI that will simply be forbidden. Face recognition in supermarkets or on the streets, for example. Then there is a second category, which is the high-risk category. And if you're in the high-risk category, you have to comply with a set of rules. Rules that fortunately are very much in line with what we already had and have on the Solvency II about fairness, unbiased, good governance, good data and record keeping, etc. But this comes from a different act. And here the EU chose to include from insurance life and health insurance. And why did they do that? They did that because they are mostly concerned about discrimination of individuals that need a life insurance or need a health insurance because of maybe a past of sickness. And here they want to prevent discriminatory measures and steps. Now I want to say that it's not that without the AI Act we would not be supervising that. We also have a mandate under Solvency II to look into this. But I welcome the fact that we can now do this jointly in a more technology-driven basis with others. The challenge of this AI Act for me and for Europe and for insurance supervisors, but our sector will be that we have a sectoral supervisor looking at it that now needs to make sure that it combines that in an efficient way with the AI Act. And therefore, EIOPA is currently, with all the member states, I'm leading the work, drafting an application guidance on how to supervise AI, sharing practices. And at the same time, I'm fortunate to also lead that work stream at the international level, in the IAS. We will also draft an application guidance on how to supervise AI at the IAS level. And I'm really looking forward to bringing to you, through publications or consultations, the products hopefully towards the end of the year. Ladies and gentlemen, I'm going to wrap up, even though there's so much more to say. I didn't even touch on what we need to do about the the pension gap, and how more investment in pensions will not only help to build capital markets union, but will very much also make sure that all our consumers and our citizens can live a good life in retirement. But maybe that is something for next time or during a break. But with all the challenges that we see, there's also a lot of innovation and ideas. And that is, I think, a crucial aspect of fostering diversity and inclusion to make the results happen. Inclusion and diversity, listening from others, that is what we do on a daily basis with 27 different countries, with different languages, different markets, and different needs at one table. Inclusive leadership is not only a reflection of a broad spectrum of perspectives that are everywhere in our society, but it actually encourages critical thinking, not forgetting about something, and having independent opinions. That is a mindset that we need to tackle new problems. And I would like, therefore, to close to reiterate the points that I think echoes throughout this conference, but it's very crucial to emphasize. The insurance industry today is confronted with many challenges, but these challenges are global of nature. And tackling those means that we do not only have to do that on our own as an insurance industry or as an insurance supervisors group, but we can actually collaborate also at an international level, sharing examples of good practices, identifying risks that are coming, and finding ways forward to deal with the risks, help society sleep at night, and economies to thrive. And it is through forums like this where we exchange these ideas in such a full room with such an important market, with so many speakers from many parts of the world, that I think that I really am positive of the fact that we actually will be able to find solutions and show that insurance is here to manage society's risks. And with that, I want to thank you again for the invitation. It was my pleasure to be here. Thank you.
Thank you so much, Petra HIELKEMA, for your keynote. It was such an honor to have you with us during this 10th edition